Hello, all. Thank you for joining us today. Today's webinar will be headed by Yash Tanna, a research analyst at iThought. The global textiles and trade industry touched $980 billion in 2022. Increasing internet penetration and smartphone usage has fueled online shopping growth in the textile manufacturing market. AI is also a key trend that is gaining popularity in the textile market. Artificial intelligence is used for quality inspection and improving the production process. So many things are happening in this particular industry. In this webinar, the following topics will be covered: understanding the cotton landscape, two, a deep dive into apparels, and three, the China plus one story. The meeting chat has been turned off until the end of the presentation, post which the chat box will be open for questions. Without further ado, let me invite Yash to take over.
Yeah. Thanks, Tarun. I hope I'm audible.
Yes, Yash, you're clear.
Yeah. So thanks everyone for joining us. Today we'll be talking about overview of textiles, and I cover the textile space for I thought. So yeah, let's start off. Yeah. So let's start by understanding the value chain in textiles, right? So we start with cotton, which is the basic, raw material. Post which the cotton is spun into yarn, and yarn is then either knitted or woven into fabric, and the fabric is then processed and finally made into a garment which we purchase from the retail outlets. So broadly, this is the value chain in which the textiles move. And if we look at where is the profit pool, right, in the whole value chain, so it's important to understand where the maximum amount of money is being made in the value chain. So the cotton farmers get around 60 to 70 rupees per kg for the seed of cotton, which is then sold at 190 per kg to the spinning mills by the Guinness. And the spinning mills sell the cotton at around 320 per kg, and then the fabric is sold at around 800 to 1000. But the maximum value creation is captured by the retailers, where the realizations are almost 2.5 to 3x per kg. Okay, so here's a table to show it properly. Uh, just a second. Yeah. So this is the table. So if you look at the value chain segments, farmers, and if you look at the profit in the chain, farmers are making 65 rupees, which is just 2% of the profit. Ginners and cotton traders are making around 125, which is 4% of the profit. Similarly with spinning mills. Uh, and the fabric manufacturers are making almost 17% of the whole profit pool, whereas the retailer, he's making 2600 rupees in the value chain. These are just broad numbers for us to understand who's making profit. So retailers are making almost 74% of the profit in the whole value chain. So yeah, here's where the profit lies in the whole value chain. Now, before understanding apparels or RMG trade, let's understand the raw material, right? Cotton. So let's understand the world and India's cotton landscape. So here's the world cotton production for the last 5 years. If you look at it broadly, it's the production is between 24 to 26 million metric tons. It was 27 million metric tons in 2018, but otherwise, other than that, in the last 5 years, broadly the production is between 24 to 26 million metric tons. And if you look, India and China, they are the major producers between 5 to 6 million metric tons. USA and Brazil make around 3.5 million metric tons. And then there's Pakistan, which makes around 1.5 million metric tons. So that those are the biggest producers of cotton. Whereas if you look at the consumption, again, the consumption is similar at 24, 26 million metric tons. But here, China is the biggest consumer of cotton. So they consume around 7.5 to 8.5 million metric tons, whereas India consumes around 5.5. So again, here, India and China are the two big players when it comes to production and consumption. Pakistan comes third in consumption. Okay, and yeah. So broadly this is the consumption pattern of cotton. And here I've made a table where I've taken the two majors, which is India and China. If we see the production versus the consumption and the difference, uh, in 2021 and 2022, there was a slight deficit in production and consumption, and that was reflected in cotton prices as well. But if we broadly see India and China, India is usually producing more than it's consuming, except barring one year 2022, while China is almost in a deficit of 2.5 million metric tons almost every year. Yeah. Now, when we look at production and production of cotton, we must look at it in two terms. One is area under cultivation, and second is the productivity. Productivity. So, if we look at, so this is a chart of the area, the yield, which is the yield of cotton, and the different, different regions that produce cotton. So, if you look at the world, the area under cultivation is 32,400. Okay, and the yield is 756. This is the world average yield, 756. And if you look at India, it's doing almost 13,000 hectares. And China is doing only 3,000 hectares. But if you look at the yield, India is doing only 447 kgs per hectare, while China is doing almost close to 2,000 kgs per hectare. So in the chart where we saw, India and China broadly producing, just a second, I'll come to that. Yeah, so India and China are broadly producing the same, which is 5 to 6 million metric tons. China is just cultivating, the area under cultivation is 3,000, but for India it's 13,000. But still they're producing broadly the same, quantity of cotton, and that's because of the yield. So the crux from this is that the world production broadly matches the world consumption, barring 1 or 2 years, which are, where the production or consumption is not matching. India and China are the biggest consumers and producers. India is usually a net surplus, and China is a net deficit. Uh, and while India has almost 40% of the total area under cultivation in the world, which we saw around 13,000 hectares, but it has very subpar yields, which at 447, which is when compared to the world at 756, and China is almost close to 2,000. And that's why even though India has almost 4.4x more area under cultivation, under production versus China, the production is almost the same. Coming to India, so here is India's cotton balance sheet over the last decade. We can first let's look at the crop production, right? Not the imports, just the crop production. That is broadly between 310 lakh. This is in bales. Okay, now bales is 170 kgs. So this is in bales. So it's 310 to almost 400, 400,000 bales. Uh, Whereas the consumption, if we look at it, is broadly because we saw that India is net surplus. So that's anywhere between 250 to 300. And then there is exports, which is around, sorry, the consumption, total consumption is around 270, 280 to 310. And then there is exports between 40 to 80 lakh bales. Uh, yeah, so this is how India's cotton balance sheet has been over the last decade, where the consumption and then there is exports of the surplus. Yeah, so the crux is that India is self-sufficient in terms of cotton needs. Production is 310 to 400 lakh bales. Consumption is 250 to 340 lakh bales, and then there is exports of 40 to 80 lakhs bales broadly. This is, and if you look at the productivity and the area under cultivation, okay. Uh, So the area under cultivation has been range bound from 111 to 135, where it made the top around 132. Sorry, yeah, 101 to 132, which is broadly the area under cultivation that's been range bound. Whereas if you look at the yield, it was 517 in 2011, and if you look at it in 2023 or 24, it's come down to 440. So the yield per kg has come down. And that's why the area under cultivation has remained range bound between 111 to 135 hectares. But the yield has been coming down, which we saw, and that is why the production in India has been range bound between 310 to 400 lakh bales. Now, if we look at the volatility in cotton prices, right? So domestic cotton prices began increasing in June 21, and this was due to the three main reasons. There was some demand supply mismatch because there was a lot of demand after the lockdown. The cotton exports were slightly higher in that season, which is 21-22, and even the cotton production was slightly lower because and I think in that year the estimates was revised down almost twice for the production. So here we can see a chart of the domestic cotton price per candy. Uh, so it has gone up from this around the 40,000 mark, 45,000 mark to almost it has touched 1 lakh per candy. So yeah, so your domestic cotton prices increased almost by 110% from 46,000 per candy to 1 lakh per candy in May 22. But if you look at the international cotton prices in the same time period, they only moved up by 75%, which means that the domestic cotton was more expensive than the international cotton, which renders India a little uncompetitive in terms of raw material, which is actually India's strength when it comes to textiles. And international prices, they were significantly lower, versus an all-time high of 229 cents per pound that reached in March 11. So in the 21-22 phase, it was much lower than the 2011 phase. Yeah, so here is a chart we can see of the international prices also in 2011, where it reached up to that 239 cents. It was nowhere near those highs in 21-22. And currently, the prices of cotton in India are between 58,000 to 62,000 a candy. They vary upon quality, and they keep on varying. And they have come below the international prices currently, and this has been the historical trend. So now the cotton prices have settled down. Yeah, and it's also interesting to learn a concept which is in India for which is the MSP, which is the minimum support price for the Indian cotton farmers. So whenever the cotton prices falls below the MSP, the government sort of intervenes and it protects the farmers' interests, by procuring cotton at a certain price. So if we look at the chart on the right. If you look at medium staple and long staple, which is the the kind of cotton or the length of cotton, they fix prices every year. And if you look at the trend, it has almost been increasing every year. So the cotton raw material, has been increasing every year from a domestic standpoint. And the below chart says in the last 5 years how much cotton has been undertaken due to the MSP exercise. So there are 2 years, 20 and 21, where almost 30%, 34 and 28% of the production has been, absorbed by the MSP operations. Now coming to textiles. So the global trade in textiles, it has almost touched $980 billion in CY22, and it has grown at a CAGR of 5%. And if you look at the subheadings in textiles, right, apparels, which is the ready-made garments that forms the majority of the pie, it's at 56%, followed by yarn and fabric at 28%, and home textiles is 10% of the pie. Uh, yeah. So let's deep dive into apparels, which is the biggest pie of the global textiles and apparels trade. Uh, If you look at the major markets for ready-made garments, they are US and Europe. So US and in Europe, Germany, France, Turkey are the big markets. And if you look at the chart on the right, US, which is almost 28%, Germany is 9%, France is 5%, UK is again 5%, and Japan is 5%. So if you look at US and Europe alone, which is EU 27, they contribute to almost 50% of the total imports. Whereas if we look at the major exporters for RMG, it's China. So China has been the leading exporter in both the geographies. It has 20. This is of as of CY 22. It has 21% share in US and 23% share in EU. And globally, globally the share is around 30%. But the trend is that it is losing share. And who's gaining share? So Bangladesh and Vietnam are the two majors who are gaining share. So if you look at the chart on the left, bottom left, they are the major apparel exporters to the US. So China's share has come down from 31 to 21. Vietnam has gone up from 14 to 17. So Vietnam has gained share there, and even Bangladesh has gone up from 6 to 9. So when Bangladesh has gained share. Whereas if you look at the EU, China has again slightly come down from 26 to 23. Bangladesh has broadly been range bound, and Turkey, Switzerland are the other major exporters to EU. Looking at the Indian textile and apparel market, so the Indian textile and apparel production market is around $140 billion as of FY22, and almost 70% of it is being consumed domestically. So that is the domestic market. Only 30% is exports. And the exports have been very range bound between 36 and $38 billion since FY15. It did reach an all-time high of $44 billion in FY22, but since then it has again come down because of the global scenario. And India has around 5% share in the global, textiles trade. Uh, yeah, so sorry, this is slightly a blur chart, but if you look at this data from 2004 till 2014-15, I think India gained some share, but post that it has broadly remained at 5% of the global trade. And the exports are range bound, as I said, between 36 $38 billion. Yeah, so here's just a quote from Mr. Piyush Goyal. So now the government is focusing a lot on this sector, and the aim of the government is to take the exports to almost 3x, $100 billion by 2030. And they are supporting the sector also in various ways, which I will, talk in the presentation going forward. So here's a table of India's major where India is exporting majorly. So again, the world's biggest market, which are US and EU, are also the biggest markets for India. US is almost 29 and EU 27 is 21. So almost 50% again there 50% of the exports are to US and Europe, and then there's Bangladesh, UK, UAE. They are at 6-7%. So India hasn't benefited yet. We saw that India's share in the global trade has been range bound at 5%. So India clearly hasn't benefited yet. What is the reason, and can it be a beneficiary now? So, if you look at this chart, China has been losing market share from 2014 almost. They were at 40% in 2010, a similar range around 2013-14. But since then, there's been a sharp drop. Now it's around 28 and 30%, of knitted and woven apparels. So China has been losing share, but India has not been able to capitalize. Peer nations like Bangladesh, Vietnam, Cambodia have taken some market share, which has been lost by China due to, and the reasons have been favorable trade policies with customer nations and cost advantages. Yeah. So what are the reasons? As I said, cost, duties, and scale are the three big reasons that for why India has not been able to gain share. Uh, So India remains cheapest till the fabric stage. So India does have an advantage. Sorry. Yeah. So India does have an advantage when it comes to raw material because we saw that India is, cotton surplus when it comes to cotton raw material, and it is very competitive globally. So this bottom left chart, if we see India, China, Bangladesh, and Vietnam, India has the lowest cost of production, dollar per kg, which is 0.34 in raw material. Even in labor, it is very competitive. But when it comes to garmenting, India becomes slightly costlier from peers. There's a chart at the bottom. Vietnam is at a 2% discount, Bangladesh is at a 6% discount. And this is mainly because of the other costs and favorable duty arrangement with nations. So this is the chart mentioning about the duties. So if we look at Bangladesh and Vietnam, and if we look at India, US, there is steady, constant duty 11 to 28% for everyone. In EU, China again has 12%. Bangladesh doesn't. Bangladesh and Vietnam, they both don't have duties, and India has 12% duty. So here there's a 12% hit. Even if we look at Canada, there is no duty for Bangladesh and Vietnam. India has, and UK also, which is a very big market, 5% of the global market. Bangladesh and Vietnam don't have duty. India has a 12% duty. So broadly, here this is a very big factor for the Indian exporters, where they have to pay duty, whereas the others don't have to. And when it comes to China, where they don't have a duty advantage as such, but they have massive scale and raw material integration. So we saw China also produces cotton, and China, like China does, they have a massive scale, which gives them the cost advantage. And because of these reasons that I discussed earlier, Bangladesh and Vietnam have gained share. So sorry. Bangladesh has gained share in nations like so. This is for knitted and woven, two different charts. So if we see Bangladesh, it has gained share in Germany, UK, France, Spain, and even Japan. So the EU nations. Vietnam has gained in the United States, so America, and this is the last 10-year data. So 2009 to 2019 data, which is the market share loss or gain data. And if we look at India, it's broadly been either steady or negative. Similarly, for the woven, if we see, Bangladesh has gained share in the EU nations, Vietnam has gained share in the US, and India has again sort of lost some share in woven space. Yeah. So, what are the key developments in the last few years? Let's go through that. Okay. Xinjiang cotton ban. So in December 21, the US president, they signed a law that they would ban the imports of Chinese cotton, which were made in the Xinjiang region, because there were concerns over forced labor. So they banned any sort of cotton that would come from that region, or any sort of cotton being used into other RMG or anything forward integrated and then coming into that region. So that was bad. The problem is that 85% of the cotton that is produced in China is from that region, resulting onto a ban on almost 20% of the global cotton market. So the biggest consumer is now saying that I will not use 20% of the global cotton market. Uh, Now, India is the second largest producer of cotton after China, or broadly the same after China. And RMG producing countries like Bangladesh and Vietnam have increased sourcing from India of cotton and cotton yarn. So Bangladesh, there's a data point that Bangladesh has increased its cotton yarn sourcing from India versus China. And but this has led to some supply chain readjustments in the value chain. So the people who are earlier sourcing a lot from China has some have shifted to India. Probably not in the RMG space, but before the RMG space, which is cotton and cotton yarn, or even the fabric for that matter. Consolidation among customers. So this is below is a table of how the number of vendors have reduced and how they have diversified away from China. So most of the brands they've started reducing the number of vendors that supply to them. Okay, and sourcing from Vietnam, Bangladesh has increased, and sourcing from China has gone down. So if you look at Gap, uh, Gap almost had 1,000 vendors in 2011. In 21, they had one fourth, almost 250 vendors. And China sourcing from 26 has now doesn't even come in top, but Vietnam and Indonesia are the top suppliers. If you look at Puma for in the same this thing, they had almost 500 vendors in 2011, which has come down to 134. And Vietnam, China, China from 39 has gone down to 29. Vietnam from 21 has gone up to 32%. Bangladesh has come in, Cambodia is coming, Indonesia and India also to an extent. So this has broadly been the trend where the bigger retailers are saying that we don't want many vendors now, we want fewer vendors, and we also want vendors X of China. That could be Vietnam, that has been Bangladesh till now. Cambodia, Indonesia, India is a potential country now. So can India be an alternate source to China? Here's a snippet from Gokuldas Exports conference call, where he, very nicely summarizes India's, how India is positioned to be an alternate source to China. Uh, so he says, so he says that, from a medium term perspective, so he says 1 2 years, but I think from a medium term perspective is what he meant. He's very positive on the Indian textile space because garmenting, especially, which is the RMG, which is the last part of the value chain, that is a very job intensive, labor intensive business, and that is accretive to the economy. And the government is also providing a lot of incentives now and encouraging capacity creation. And the macroeconomic situation, which is the resistance towards China, he feels that that is not going away anytime soon. Then he says that China is exporting almost close to $120 billion of garments. We saw India total exports is around 36, and I think yeah. So he's saying China is exporting about $120 billion, and that has to come down. That can be either absorbed by Cambodia, Bangladesh, India to an extent. He's saying Vietnam is getting slightly expensive nowadays because they are also focusing on electronic manufacturing. And the big brands have also tried out other countries like Central America, Africa, and all of those. But somehow those have not worked out because the volumes have not kept pace, with the expectations. And he feels only the bigger players in India can actually step up and deliver to the requirements. So capacity creation and scale is one of the key factors which he feels where India can gain share. And here he talks about the FTAs. So he's saying that the FTA with UK and EU could be a game changer for them, or for all of the exporters from India. Sorry, that can result into a massive inflow of orders for the Indian apparel producers. Yeah, and when you spoke about government support, on the government has come out with various schemes, in the textile space. PM Mitra Park is one which is a very interesting scheme. It gives the producers a complete infrastructure where they can just put in machinery and do a plug and play sort of a model. So that will bring in scale for them. PLI one for textiles, which was mainly for the man-made fibers. There is a rumored PLI two, which can come in for apparels and home textiles. The ATUFS, which is the upgradation scheme for the machinery. So the government is encouraging the apparel or the textile manufacturers to get the latest machinery, the more efficient machinery, so that they can become cost competitive and they can have economies of scale. Uh, and in addition to these schemes, they are also providing the ROTEP, which has been there, and the duty drawback scheme, so tax incentives. Uh, in addition to that, India is also actively looking for FTAs with the UK and later with the Europe, which is sort of medium term, which will allow duty-free access, to one of the biggest markets in the world. So if you look at the key listed players, they have been gaining share in the overall garment exports from India. Uh, so what I mean by that is, if you look at KPR, this is KPR Mills only garment revenue. It's gone up from 1100 1200 crores to 2500 crores. And below is India's total garment exports, which is from 1 lakh 3,000 to 1 lakh 30,000 in the last 4 years. So KPR's share in overall garment exports from India has gone up from 1.1 to 2. So it has almost doubled in the last 4 years. And similarly, if we look at Gokuldas exports, they have also gone from around 1200 to 2200. And the garment exports obviously remains the same. So their share has also improved from 1.1 to 1.7%. So the larger players who are actually putting up, good enough capacity, they are being looked at as alternative sources, to supply to these big brands. And if you look at the capacity and capacity expansion plan of the few listed players, so I've taken KPR, Gokuldas, and Pearl Global. Shahi is one of the biggest other players as well. I think they have 143 or 150 million pieces capacity, but that is not listed, so we don't have a lot of data for Shahi. Uh, so if you look at KPR, they have capacity, I think, 147 to 157 million pieces. 10 million is the brownfield sort of a capacity that they have that they can do if they want. So 147 to 157 is the current capacity. Near-term expansion plan. So they have not announced this yet, but it should be on the cards, which was the previous round of expansion. They have slightly indicated that the next round of expansion will also be similar to the last round of expansion. So 40 to 50 million pieces is what the expansion could be like. They are waiting more for the demand revival from the global economy perspective, and what government incentive they can get in the new facility. So that's why they have not yet announced it. Uh, and so this is percentage of capacity added in the last few years. So probably in the last 3 or 4 years, how much percent of the existing capacity has KPR added? So they have added 28%. So they were, I think, around 115 million pieces to or 110 million pieces, from which they went to 147, 127 million pieces. So 28-30% of capacity was added. And now going forward in the next few years, they are again looking to add close to 30% of the existing capacity, which is 147 million pieces. Similarly, if we look at Gokuldas, the capacity currently is 36 million pieces. They have done a few acquisitions, and then there are other greenfield and brownfield expansions as well. So the capacity addition could be anywhere between 43 to 45 million pieces. Uh, in the last few years, which is before the 36 million capacity, they only added 20% of their capacity. But going forward in the next few years, they will be adding close to 120% of the capacity. So they are very bullish and very aggressive, very confident of getting some share. So they have aggressive plans. And if you look at Pearl Global, they have around 81 million pieces. Their target is to, add 40 to 60 million pieces more 40 to million 60 pieces by FY28. They in the last few years they added around 17% of their existing capacity, and again they are also taking a jump in the next few years, which is by FY28. They're planning to add 50 to 75% of their existing capacity. So broadly, what I'm trying to say here is that the bigger players are not shying away from adding capacities, and they are pretty confident of India's landscape to gain share. And if you look at the performance, of the key listed players over the last 5 years, it has been pretty good. So KPR has delivered close to a 47% CAGR, whereas the earnings CAGR has been 23%. So it has, enjoyed some benefits of re-rating. Gokuldas again, 58% CAGR, whereas the earnings CAGR has grown at 48%. If you look at Pearl Global, it has grown at 49% stock price CAGR, whereas the earnings CAGR is only 45 is 45%. So they have not got any sort of re-rating, even though the earnings growth have been strong. And if you look at SP Apparels, they are more into kids kids clothes manufacturing. Their earnings have grown around 12%, whereas the stock has grown around 14%. So, what's the outlook? So, outlook for cotton, firstly, the raw material is steady. The problems that are faced in 2021, 2022 season, I don't think the raw material problems will be faced now. The outlook for cotton is steady, and there are no sharp price rise expected, because the cotton season has also been good for India, and the demand has also been on the lower side because of the global situation of the lower demand, and hence the prices are in check as of now. Uh, the last year broadly, FY24, FY23, after FY23, H2 FY23 and FY24, they have been a little tough for the textile space overall, be it yarn manufacturers, or be it home textile players, or be it RMG players. This is because of the softness in demand, and also because of the inventory destocking cycle by the retailers. So a lot of inventory was stocked up post COVID, which was destocked after the 1 or 2 years post COVID. Home textiles was the first segment that recovered in the overall textile space. You can see from the numbers of the last 2 quarters and the commentary from the players. And RMG players, which is they are expecting a recovery in FY25, probably good growth from H2 FY25. That's what the broad expectation is. And RMG players have expanded capacity. So Gokuldas we saw organic and inorganic route, and KPR is also in planning stages. Pearl Global also we saw, they have a target in anticipation of a strong recovery. Yeah, and overall India seems to be poised to grab some market share, world market share, given the favorable factors. And the bigger players should gain scale and become even bigger. So I attended the Bharat Tex Expo, which was in Delhi, which was one of India's biggest textile expos till date. There was a lot of buoyancy there among people because they have never done an exhibition at this scale. There's a very interesting company who is focusing on plastic PET bottles, and they are recycling it and making fabric, and even for that matter of fact, from fabric to end product, which are garments. A lot of focus was there on sustainable clothing. Uh, then there's this other company who's actually home textiles player. He's focusing on fashion bedding. So earlier they were just in normal bedding. Now they're focusing on fashion bedding, which is probably more margin accretive for them. This increases their TAM as well in the global market. So Indian players are not only looking at just getting the share of the existing products, but they are also looking at to increase their TAM in more value-added products. Yeah, so these are the sources that I've used for the presentation, just for your reference. Gokuldas QIP Doc, Ministry of Textiles website, CCI website, and Spark report. Yeah, coming to TrueBlue, which is our large cap fund. The I thought way, or what is our investment philosophy? So we have a long-term focus. There's a non-consistent investing, and usually follow, there's a bottom-up approach. There's a high focus on risk management. And the what is the True Blue portfolio trying to capture, right? So we are trying to capture India's growth story, as well as the global champions from exports. We spoke about Indian players gaining share of the global market. So we are trying to capture those companies as well who will gain global share. What is the USP of True Blue? So it's a 100% pure large cap portfolio, and it's a concentrated portfolio. We have high active share. Uh, Typically, there is a very low churn. It's usually a buy and hold strategy, and there are zero fixed fees, so it's usually performance based. And as I said, it's a completely large cap portfolio. 23 stocks, 23 large cap stocks, no small and mid cap. And when I said about high active share, which is active investing, if we look at the top 10 stocks of Nifty 50 versus top 10 stocks of True Blue, uh, Reliance is something that True Blue, there wouldn't be much focus. So here are the top 10 holdings of True Blue. So the top five stocks for is close to 40% for both. But if you look at the top 10 and top 15, here's where the difference comes in. Top 10 for Nifty is close to 17%, where for True Blue is close to 25%. And top 15 stocks for Nifty is 10%, where for True Blue is 14%. So here's where we invest in companies for the medium term, where we feel where we have good IRRs. Here's a chart showing the drawdown of True Blue in stress scenarios. So this is of June 22, where there are different funds. There is Nifty 50, and then there is True Blue, where Nifty 50, it had a 17% drawdown, whereas True Blue only had a 12% drawdown. So there is focus on risk mitigation. Similarly, another event where March 23, where Nifty almost was down by 10%. The worst performing fund was down by 16%, whereas True Blue was only down by 5%. So this is resilience in a stress market, which True Blue has demonstrated. Our endeavor, so what you should expect is broadly 200 to 300 basis points above the benchmark returns. And the time frame that we consider is usually a 3-year rolling return. Yeah, the product suitability. Yeah, so here's the fact sheet. So we have an investment team. Obviously, Mr. Sham Shekhar, and Mr. GR Balaji, who's the co-fund manager for Trueblue, and head of research for iThought. Uh, and apart from them, also we have a vast, fund management and investment team. Uh, yeah, and here's the performance of Trueblue and the key terms. So 50 lakh minimum investment. There are two options: fixed or fixed plus performance, and then there's a fixed option as well. Yeah, so I think I'm done. Tarun, we'll be happy to answer any questions that people might have.
Sure, yes. Let me just, open the chat box for questions.
Yeah.
So the meeting chat has been enabled, so any questions can be posted on the chat board. Thank you.
Yeah, so hi, Dinesh. I think what is the reason for yield per hectare going down in India? I think it's broadly to do with the quality of cotton seeds. So I was reading upon this where the quality of cotton seeds and high amounts of fertilizers or pesticides used sometimes spoils the crop quality. That is the main reason which I could find out. And going forward, also, I think the government is working on this as well. So they are trying to, go for higher quality of cotton seeds, which is slightly expensive, in price, but the yield is pretty good, and that's the endeavor of the government as well. But I mean, the data suggests that nothing has happened for the last few years. It has been going down. Yeah, I think broadly that's the reason why the yield per hectare has been going down. I hope that answers your question. So short to medium term risk. So broad, I would say the short term risk is or the medium term risk. Most of the players are anticipating a recovery in this current year, which is FY25. Home textile players have started reporting good numbers and they are expecting a good year going forward as well. Even RMG players are expecting a good year. If recovery doesn't come, if the US and Europe, the inflation remains high and retail sales are not good, and if they are not able to get rid of the fresh inventory now that they are buying, so retailers have broadly destocked their inventory and they have started buying some inventory. They are still going slow on inventory buying, but if that inventory also does not get liquidated because of the buying pattern or the situation in the US and Europe, then these guys will not get orders. And I think then again there'll be a slow year, which is not expected by the incumbents all or the players in the RMG space. I think from a raw material standpoint, the current year does not seem to be a worry. The cotton prices are pretty stable, and we should end with a surplus this year. I hope that answers your question, Majid. Yeah, so opportunities in the spinning business. So I would not like to comment on stock, the specific stock that you've asked, but on the spinning side also, I think uh, yeah, thanks, Dinesh. Yeah, sorry. On the spinning side also, so the earlier the problem was, so there were two problems for the spinning players. The first problem was that the domestic cotton prices had gone above the international cotton prices, and that's why Indian players were sort of uncompetitive in the global market because from cotton you make yarn. and the yarn prices, they were the margins took a hit because it's a commodity, you cannot sell it at a higher price. And secondly, the problem was demand. So the demand for the forward integrated products, which is the RMG, which is the home textiles, that was pretty weak. And that is why the capacity utilization of these spinning players also. So there were two problems. Seems like the cotton yarn spreads have bottomed out from the commentary of players, and even they are expecting a demand recovery, because of which the spinnings, the cotton yarn spreads could improve, the capacity utilization can improve, and eventually the margins for spinning businesses, can come back from the lows that they had done. Uh, yeah, so I think that is what the expectation is. But even though this is broadly what the scenario I understand. From the commentary of players, I think a few large players are still not committing to capex. So they are still slightly cautious on the scenario. Yeah, so that's my take on the spinning business. I'm sorry, I don't think I can comment on the stock specific query that you asked. I hope that answers your question. Yeah, I mean, Sid, yeah. So the question is, I understand that it's mostly a buy and hold strategy for True Blue, but do we have an exit strategy or a criteria for the laggards? No, definitely. That holds true for not only True Blue but all the schemes and all the products across. I thought there is definitely a criteria for exit. It can be valuations where we are not comfortable with the forward IRR, or it could definitely be for the laggards, where we might have got the call wrong. So in those cases, we would definitely take the exit and protect either the gains or cut the losses if we have taken a wrong call, or if the valuations have gone to a level where we are not comfortable holding for the next few years with the IRR is weak. Will this be a good year for textile stocks? So, I mean, I have tried my best to explain the scenario going forward. Seems like this year could be a recovery year, and we could have bottomed out in most spaces. Yeah, so seems like it could be a good year, but yeah, I mean, I cannot comment for sure. Uh, yeah, so India did have a cotton duty on cotton imports, and this is the reason why the Indian players were not able to import cotton at that price, and why domestic prices went higher. So I put that slide, the reasons. The production estimates had been cut down for that year. The demand suddenly shot up post-COVID, and the exports were also slightly, probably on a slightly a higher side. So the thing is that there was sort of a deficit situation that got created. Yeah, the generation. So even we have tried to understand the statement, that is China dumping, textiles or yarn, and how or when this situation will be normalized. But we should look at it from this perspective, that India currently is a very small share. It's just 5% of the global textiles trade. And if you look at US or Europe, it's very small. And if you are looking at it from an investing perspective, there are very few key listed players who are very competitive when it comes to either competing with Chinese players or other players. So they have created their own economies of scale or their own niches where they are able to get these customers, and that is why I think the confidence which comes is that they are expanding capacity. So irrespective of the dumping situation, I think this is what we should actually look at. I hope that answers your question. Is this a good option for NREs? I believe my team will be better. They will be able to give you a better answer for this. So please, Tarun, just take this question from Mr. Sam and get back to him. He is asking, is this a good option for NRE? Do we see a multi-year
Sure.
capex? Yeah. Next question, do we see a multi-year capex cycle for textile companies benefiting companies like LMW? Yeah, so definitely. I mean, if we spoke about, if India can gain share, right? Uh, and if players have to expand. So if things fall in place, if we also sign an FTA with the UK, and if India is actually able to garner global share, which is its aim, textile companies and the bigger companies like we spoke about KPR, Gokuldas, Spral, Pearl Global, Shahi, all these guys will definitely go for rounds of capex, and yeah, that could benefit companies or machine makers like LMW, I guess. Yeah. So this Leonard, I believe that this webinar will be there on YouTube on the iThought channel in probably a few days, and you can view it. Am I right, Tarun?
Yes, yes.
So, the capex could be both. It could be greenfield or brownfield. So, if we look at Gokuldas only. Gokuldas has done a greenfield capex as well, and they are expanding capacity in the current, current campus also. But the problem here in garmenting, the problem is a lot with labor as well. You have to expand in areas where there is labor availability because garmenting is a very labor intensive, business. There could be a greenfield capex as well. You definitely look at the asset turnover ratios, but the problem with this ratio as well is, I'm not saying it can be manipulated as such, but the problem with the ratio is that now I'll take an example. So Gokuldas has put up a unit which will do knitted garments, and they will do knitted garments. Until now, they were mainly focusing on woven and other garments. So the realization for those knitted garments and the time taken for those knitted garments, which is the asset productivity, basically, that will be different. So then asset turnovers will be different from again what were there in the past. So more than looking at that, I think we can look at, so definitely that is one parameter that you can look at, asset turnover ratios, how they are scaling up. But yeah, I think apart from that, also there are other key things you can look at. Capacity utilization or the machines could be one key parameter. Are the companies looking at capex from internal accruals or by borrowings? So I think from the key companies, I believe KPR should be able to do it from internal accruals, if I'm not wrong. But they have not yet announced, so we wouldn't speculate on that. Gokulas, with their acquisition and their capex plans and everything, I think they are doing a QIP now. Yeah, so they are raising equity. Any comments on KPR Miss business? I'm sorry, I don't think I can comment on the specific business. However, KPR is one of the key players. It's one of the very big players in the RMG space, and they have scaled up phenomenally well over the last few years. And yeah, I don't think I can comment on that business specifically. I'm sorry. I hope that answers your question, Dinesh and Leonard. Any more questions? Thanks, Dinesh. Thanks. Tarun, I don't think there are any more questions. Probably.
I guess so, Yash. I think we can close the presentation now. What do you say?
Sure. Sure. Yeah.
Thank you, Yash. Thank you all for joining us today. Thank you all.
Thanks. Thanks.